And here we go, back with the liquidity inducement cycle. But now, of course, we shift one gear higher, as obviously slowly but surely we're progressing. And this will be one of the most important videos about this whole series. It's technically the introduction video to the most important video. And this will be your ultimate guide overall. Okay, so be very, very aware of what's to come. Make a lot of notes and don't underestimate what is about to come, because you will absolutely love it and that will change your trading once and for all forever. Okay, so we already digged into the liquidity inducement cycle and obviously identified slowly but surely what is on build-up, what is the inducement, what is the mitigation, right? So you should be very familiar with those 3 steps already. And now we can add one more step to make it way more reliable and way, way easier for you to not make a mistake. Okay, and what is that step? It is the only time we will use market structure, and to be fair, we call it relevant market structure, right? Because we made a little bit of fun out of market structure in week 1, as you can remember. But now this is the only time we actually use it, and that's the most efficient way you can use it, period. Okay, so overall, of course, this step is optional. So like the build-up, inducement, mitigation cycle, that's a universal law, right? Like an evergreen concept, that's always the case. But if you add the relevant market structure or the BOS into it, you will see how insanely powerful it can be on top of it. Okay, so first things first, as always, and from now on, be aware that when we show you like a chart, it is 90% of the times it is a 5-minute chart. As we covered earlier, the M5 time frame is our new home. Okay, that's where the magic happens. That's where the whole clean intraday picture presents itself, and that's where everything is analyzed on a perfect visual picture. Okay, so always be aware, M5 will be your new home. Okay, of course you will get some templates very soon as well, so you see the whole picture perfectly fine. Okay, so also for the LIT cycles and the extended LIT cycles and overall intraday analysis, M5 is the way to go. Okay, so as we started off with the LIT cycle, even the extended LIT cycle, it of course all starts with the build-up. The build-up is always your first thing you have to identify, okay? That's why we spent so much time in week 1 to identify liquidity and understand liquidity, because if you can't identify liquidity, you know the saying, you will be the liquidity, so that's the first step always, okay? So build-up, 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 build-up. Always identify the build-up properly. Again, we had it before, retail is in the stage, they're always buying and selling, it's a mix of both, supply, demand, blah, 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 retail concepts building up. It doesn't matter what retail concept it is, they're just building up, some buying, some selling, doesn't matter, they're just getting their reasons to enter the markets, right? Of course, in our stage, we're just waiting, dancing, grooving along with it, right? For us, it's not something we want to be involved. That's where we be, retailers, they getting induced, obviously, right? So of course we stay away from that scenarios. Okay, so if you just look at a chart right here from April, right, whatever, just random chart, it doesn't really matter. You will see if you backtest this later on, you can't just use any random day, whatever, and we will show you a lot of examples anyways. But this one, whatever, 4th of April, okay, so where are the build-ups in this scenario? Okay, so focus on the bigger picture and also the details already. Okay, so some are very easy to spot, some are a little bit tricky to spot. So I give you like a few seconds. You can note it down, but it should be very clean. There's just 2 tricky ones in there, and I show you where the tricky ones are in there. But for now, just see if you can figure it out yourself. Right? Okay, so the tricky ones would have been here and in here. So sometimes they are a little bit hidden, okay, but let's reveal it. Okay, so oops, I put in some German here. That's of course answers and so yeah. Anyway, so you see the very clean build-up with the channel of B, right? Huge build-up, right? And of course, we have some ranging going on in here with D. Then we have a little bit of a hidden one, like where it builds the equal highs, builds the equal lows. With the F1, G should be very obvious, the channel build-up downwards, right? And then, of course, the little hidden one with H. Okay, that's your build-ups right here. Based on the build-ups, you guessed it, what's now the stage where retailers, first of all, they're raging or be like, oh yeah, it's going. And obviously they jump on, or the other ones being already stopped out like this guy in here and be like, oh no, right? Of course, we already spoke about retail inducements, but now what does it mean to LIT? We of course covered it earlier, but of course for us, that's where we get into the stage of, oh, fascinating, very unexpected what happened there, right? So based on the build-ups now, we can, of course, identify our inducement. So if you just look at the picture of the build-ups, it's just very easy. Of course, now you're looking at it in hindsight, it's even 10 times more easy, but even on the edge, obviously, you will see later on of how perfectly fine or easily you can identify the inducements based on that. Okay, so of course, little question, where are the inducements? Is it A? So A, you already know what that is, right? A is a high, so I'm not sure about A if that's an inducement. B, by B we mean this wick with speed, and you should already know this timing aspect to it, right? So, okay. Could make sense, breaking out of the channel with speed and timing. Okay, we know what that is. Then C, what's going on here? I'm not sure. That's an inducement. D, that means obviously out of Asia low with speed, right? Okay, could be something, right? Then E, this means like we have this one in here. Where did they get induced? To low side to do what? Okay, so E, okay. Then we have G, that's a little bit a tricky one, right? Because technically, again, it's a little bit hard to see, but the channel, it's getting then with speed induced to the low side. Timing, you should know this by now as well. New York trap time, okay, with speed, again, downwards. Think about it, again, now it's a wick on hindsight, but even these candles, solid black at one point. And obviously, if retailers see that, they get very excited about that. Okay. And then obviously H. Okay, I'm not sure about that. But then obviously we have I. Boom. With speed. Inducing the channel. Okay. Oops. Perfect straight line. You get it? All right. So let's bring some light into the tunnel. Of course, we had the B one out of London Open. Inducing a channel. Again, this candle was solid like this. At some point, of course, retail's getting completely excited about that, right? Jumping in like crazy, right? And obviously this one is the build-up, right? Then we had D out of Asia low. Of course, look at the speed at it. Of course, picture perfect inducement down there, right? All right, after this huge build-ups, even here and here, right? And of course, speed induces it to the downside. To do what? Prepare for, of course, to go higher. Before they do that, of course, they build up one more time, induce one more time low. And obviously, you should know what this is. We will reveal it in the next steps, right? But you should know already what happened in here. Same thing for G. You should already know what happened in here, right? But again, that's the build up, channeling downwards, inducement with speed, timing to it. And obviously, then it does something else. We will dig in the next step. And of course, this build-up gets induced to the high side. All right, so we trade obviously away from that then there. Okay, very clean. So a little bonus question for the stuff you should already know by now as well is when did the inducements happen, or does the inducements happen, right? Because we already digged a little bit into it, but it should be very clean for you, and that's where you're connecting the pieces, and you can see it's not only the inducement, the build-ups, the mitigations, and obviously you'll add another step to it and multiple other steps, but you already can see another step is the timing that makes it way more reliable, of course, and way more structured because you literally know exactly when to look at it as well, right? And of course, we covered the timing aspects already for a very good compass, so you have orientation to what's going on. So the answers, of course, is the first one. You said it a couple of times now. London Open, almost to the minute, right? And of course, we had another one. This one out of this build-up in here, perfectly. New York Open to the minute, right? We didn't have too much going on in magic manipulation minutes, only this one in here, right? But that's technically just the mitigation for later on, right? But we obviously will cover that in a speckle, right? And of course, we had this inducement when it happened. What a coincidence. New York trap time. And then, of course, this one happens in London close. What a surprise. What a surprise, isn't it? Right? That everything literally aligns up perfectly. Like, okay. So now we add in a new step, obviously, to make it so much more reliable for you. Okay. And that will be, of course, the relevant market structure break or the relevant BOS, right? So retailers in that stage, like, they're seeing break of structures everywhere, right? So for them, they're doing the calculations in their head and like, oh my God, new break of structure here, break of structure here, break of structure here. What do we do though? We literally say, thanks, brain, because you did all the steps before. You need a build-up before. You need an inducement of this build-up, and only then you say, thank you, brain, for doing the work before. And then, only then, you look for a relevant market structure. How does it look now? So, where are the relevant break of structures in this scenario? So we had obviously these huge build-ups, finally an inducement to the high side with timing confirmed it to the minute, right? Okay, so then we obviously have this build-ups in here. Next inducement is to the low side of Asia low. Perfect, we got that, right? Okay, interesting. So where would be the break of structure in this scenario? Then we had this one, right? So where would be the break of structure in this scenario? Then we had this inducement. Where would be the break of structure in this scenario? And then we had this inducement. And where is the break of structure in these scenarios? Okay, if you get confused a little bit, no worries. Let's reveal it. Right, so the answer, okay, this is the inducement high side of London Open confirmed. This is the push that made the inducement, okay, or led to the inducement. So this is your relevant structure break. Okay, or if you saw this push all the way leading up there, you can use this one too. That's also fine, but this one for intraday purposes is way better in here. Okay, then of course we had this inducement. What's the push that led to this inducement? Right here. That's the push that led to it. Right, so again, they're faking the double bottom with this one, fake pullback, and that's the push now. Whoop. That tubed Asia low, and of course this pushed the structure point in here is our relevant break of structure. Okay, then this one in here, okay, is a little bit tricky one, right? Because of course in here we have the build up. That's the inducement. Technically, this build up push in here, or like this one, depending on how you want to see it, either this one or this one. But again, just for the bigger picture, this is the push in here. You also could mark up this one for the internal break of structure, right? But this just locks in this zone once again even better, right? But then technically you have the break of structure of this inducement inside this. So this all in here is like inside this push anyways. So you can mark it up double if you prefer that. Then you just take this break of structure point in here as well based on this inducement. Okay, and of course in here we don't have a break of structure because this is just one big ass build up in here, and then of course we have another build up that leads to this inducement in here. So this is not a break of structure. This is the build up that leads to another inducement. So again, in this one we don't have a break of structure, so this one gets invalidated. Easy as that. Okay, and of course we have this build up, inducement high side. This technically is the push, right, that led to the high. Or again, if this one you don't like, same thing scenarios in here, right? This one should be your markup for leading to the high side. If you don't see that for whatever reason, then use the more clear one in here. Same thing in here. So again, if you miss that push for whatever reason, then the clear push would be here, but the better one is in here. Okay, so this one push, again, this push, pull back, new high. So this is the push that is the relevant break of structure in here. Or if you want to make really sure, then make this one instead. Okay, but those are the break of structures in here. And now to put the cherry on top, it should become very clean. What's the next things? And again, that's again prevents you from making shit up, because you literally have to follow these other steps before what now? The mitigation. Again, retailers in this stage, they have mitigation areas everywhere. They have breakout structures everywhere. You base it on the cycles and filter out everything else. Okay, so you're not being confused. You will be literally cheers to it, because now you're getting interested. How does it look like? Where are the mitigations now? So remember, first you need the build up, then you need the inducement, only then you need the relevant break of structure, and only then, again, if it's confirmed with timing, even nicer, and only then you look for mitigations. Build-ups, inducements, break of structures, mitigation. Right, so same thing. Build up, inducement, break of structure, or like this one, comes back into, interesting. And then what? Build up, inducement, break of structure, okay, into, does it click already? Okay, does it click already? So there you go. That's your answers right here. From the top, obviously, where's your imbalance zone? Was right here after the internal break of structures, right? So if you take this one, there's no imbalances in here. So you take the order flow entry after it like this, taps in here, magic manipulation minutes in here, right? Perfect. But it's all based on the cycle before, build up, inducement, break of structure, and only then into the mitigation. Same thing here. Induce low out of a low. Perfect. Here's this break of structure in here. Mini build up inside of it. Induce the mini build up. Have your relevant market structure break in here, or the bigger one in here. Comes back, build up, inducement into now this mitigation. Right, perfect. And timing confirms it. Lovely stuff. And of course, we have this build up, inducement high, relevant break of structure here and here. Where's your mitigation area? Where's your imbalance areas? Right in here. Boom. Do you see how simple it is? Do you see how clean it is? And do you see how literally, where's a mistake here? Where could you make a mistake? Like where? It's crazy. Like that's the cheats, like literally. And that's like literally only the LIT cycles simplified. So simplicity is key. You see, it can be so freaking easy. Okay. And it's so clean also. And it's so effective. You have no idea. Okay. So backtest the shit out of that, because that will change the way you view charts forever. Okay. So, and it comes even better than that. Even better than that, of course, now we have the LIT cycles. You have the extended LIT cycles. But guess what? The extended LIT cycle will open the gates for something completely beautiful you will absolutely love. And that will be the overall LIT simplicity approach. Okay. And you're in for a treat. That's like absolutely the cheat formulas. And that's already in week 2. Think about that. So we will cover the first steps of the beautiful LIT simplicity approach. And as you can see in this beautiful animation here, or not animation, but illustration, right? It's a factory approach. It's always the same steps. You're not skipping whatever from here to here, whatever. No, it's a step-by-step formula, and let's dig into it.